Thanks for joining us for another episode of Boom and Bust. I'm your host, Tony Clement, here at the News Forum, where all voices matter. I'm pleased to welcome back to Boom and Bust the Honourable Dan McTeague. He is, after a successful career as a Member of Parliament, he is now President of Canadians for Affordable Energy. Welcome back to the show.
Good to be here with you, Tony. Thanks for having me once again.
Oh, for sure. No problem. I guess the first obvious question is, what is the state of affordable energy options for Canadians right now?
Getting a little better on the market side, but getting lousy on the government side. As governments find ever more increasing ways to increase the price of energy, markets are shedding their positions, and we're seeing a scenario that's developed where, in fact, if federal government could get out of the way, you would actually see fuel prices drop in cases of energy by about a third. In other words, 50 cents a litre. I say that because the weak Canadian dollar, the product of the fact that countries become less attractive to investment, and of course the factors of first and second carbon tax, depending where you are in the country. The first carbon tax being about 20 cents a litre with tax, with a HST, and in places like British Columbia as much as 20 cents a litre already, and then Atlantic Canada as much as 8 cents a litre. The second carbon tax is coming for Ontario and is now being deployed slowly but surely in Quebec.
Yeah, so obviously, is that the main driver of the cost of gasoline for Canadians?
It really is. There are factors external to that, markets being very nervous about the state of the global economy, focusing on Europe and North America in particular, where there's a sense that things are slowing down. Of course, they're taking some of their information, their cues from China, saying China's market is not going great, therefore North America will start to slow down as well. But we've seen a great summer where gas prices, energy prices have actually dropped rather than rise, which they normally do. I think that's the first time I've seen this in a non-COVID period where prices actually go down when you expect them to go up, and all symbols indicate that fundamentals would have seen prices go up, not down. That we are seeing price decrease today. Oil dropped $3.50 a barrel yesterday, having dropped another half a dollar a barrel today. Currently, the market's not finished, while the Canadian dollar is not responding to any of this, except maybe to lose more value versus the U.S. greenback, thanks to the decision today by the Bank of Canada to drop interest rates, which it, of course, has to, in a reflection of a very weak Canadian economy, which the consumer is really tapped out.
Yeah, no, there's a whole lot happening on some different fronts here. You mentioned the drop in investment in Canadian energy assets. Can you go into a bit more detail on that?
Yeah, Canada has made it very clear over the past near decade now, since the new government took over, that it's not really a place you want to make a lot of investments in the country. And if you do, there's no risk, there's no chance, and no upside. There's no likelihood that the project that you're investing in is, even though the federal government gives its imperature of support, is in fact going to be realized. The best example would be the Trans Mountain Pipeline. The company, of course, had put billions towards building a pipeline, had passed a number of rigorous tests, and was told that in the end that the project was not going to go through, at which stage they had a very strong legal case, which they took and were prepared to take. Federal government then bought the company out, bought the assets out, finished the rest of the pipeline. As a result, we wound up about $32 billion in the hole, thanks to that enterprise. But I think, generally speaking, there is a view in this country that the things we do well in forestry, mining, energy, are not big items that people want to invest in right now. And of course, agriculture can't be ignored. Although we are, really a superpower when it comes to agricultural products, it looks like there are a number of ominous threats on the horizon, most notably China and canola, in response to the ridiculous move by the government to defend an industry which hasn't really taken off. It is only the result, referred to EV, building EV mandates, EV batteries, that is only possible by massive amounts of federal government subsidized funding, often incurring massive debts.
I promise we will get back to EVs and the subsidization, because I knew that you'd have a particular opinion on that. We've got about 30 seconds before the break. So from your point of view, do you think that the Trans Mountain Pipeline being completed is a positive signal as compared to all the negatives that are out there?
It was a positive signal up until the time which the federal government had to buy Kinder Morgan and spend 4 or 5 times public money to do what the private sector was prepared to do and attract investments to do that. I think the decision will ultimately be in the next 10 years when the government finally rids itself of the asset. Perhaps someone else has acquired it and can continue to to demonstrate that adding another 500,000 barrels of oil to the global markets is a good thing for Canada, and it could very much help towards strengthening what is a weakening Canadian dollar. That's important for everybody because all of our commodities are priced in U.S. terms. A weak Canadian dollar is not necessarily a good thing, as was thought in the past.
We're going to take a brief break, Dan. We'll be back at you after these commercial messages.